Alrighty, welcome back, ladies and gentlemen, to the actually coziest part of Solana's finest podcast, Sol Brothers, markets, prices, charts, and technical analysis, together with my friend Eno. Welcome to the price charts, Eno. How are we doing today?
Oh man, I already told Simon before I got on this call that I have a slipped back or slipped disc. I've taken a lot of muscle relaxants, so I'm feeling a little foggy today. I know it's pretty early where Simon's at. Where are you headed off to today, Simon?
I'm flying into Dubai very soon, so I
I
need
see.
to leave this place in a few hours when we normally record this podcast. So today it is 6:47 a.m. here in Bulgaria, but we need to talk about some salami prices, and I don't care if you're high or not. We got to do it, you gotta stay with me today. Um, we do feel sorry for your back. I actually do. It is quite a setback to your gym journey, but we're not gonna let you give up so easily.
It's
So
fine.
yeah.
I'll be back in the gym soon. But first, of course, Simon, you got to explain what's going on in the markets, man. It's getting worse.
I just saw that. Yeah, let's head over here and look look at our prices and where we're at here. We're looking at the Solana chart right now. I'm going to zoom out a little bit into the 1 hour chart, and well, we can see that while I was asleep, someone decided to do something silly because the price jumped from $139 to $126. But the beauty is that I didn't see that sharp decline coming, but it still fits the overall agenda. Hence, my trading analysis that and my little labels on my chart told me yesterday to set the stop losses tight and definitely not open any big positions here because we've been yesterday before basically the end of Sunday ending last week, we've been around up here around $134, $135. And it wasn't a completed ABC structure yet. We had to see one more low basically. So I was looking for 132, maybe $130. Now I don't 100% know what's happening. I don't know if Trump. I mean Trump said something silly, but it shouldn't affect the markets this way. We're going to get to that. But anyway, we saw the low here, printed a low in the 21st of November last month, basically finishing our big ass dump here to the downside as it looked like. And right now we're trying to make our way up again. Obviously, this current structure does definitely look a little bit weak. But on the other side as well, it opens again doors for lower buy prices. I think you were the person last analysis session where you said, I want another dump. So here you go. You are welcome. You wanted it, you got it. Um, I think the chart is doing exactly this right now, what I am labeling here. If you are watching with screen on YouTube, then you can also see what's happening here on my chart. From the correction high at $145, we're now in an A and B C structure to the downside. The 1-2 scenario in red on my chart is definitely invalidated now. As you can see, the fib levels for that scenario were up to $129, really, maybe a little bit lower. But even if we go one step further for the last wave 2, okay, actually we're there right now. So the 1-2 setup is not fully invalidated yet. As of the time of recording, this can change in the next 10 minutes. So the 1-2 setup here in red is still alive. Just the 2 is going to be all the way down here, which is kind of the last fib level for a valid wave 2 wave count starting from the low prices here. So 1-2 could still play out, and then the 3 could unfold next, which would need an impulsive move actually. So this week, ladies and gents, needs to be bullish, even though it doesn't look like it right now. It would need to be bullish to at least keep the red count alive. Also for the other scenario here, for the AB, right? Like we see the A to the upside here. And then we're now in the B to the downside, and that is already fairly extended. Also, this one can't go much lower. We kind of have to stop here very soon. That's also why the price is currently slowing down here on the Solana chart. To keep all this here alive, ABC, we need to see a turnaround. I strongly believe if I'm not missing anything crazy right now in the markets that we are not aware of, then I think that we are definitely going to see a bounce, actually, because we're at resistance levels right now. We're at fib levels right now. We are oversold on the RSI 1 hour chart on Solana quite heavily. RSI is below 20 currently, which we saw last time when the price was, well, beginning of November, actually, when the price started dipping here. And all this other dumping here was an RSI higher than that, which is also quite good. Yep, it looks dangerous on the charts, but actually for like swing trades right now, not too shabby, not too bad. Bitcoin also going down, but here on the weekly chart, still looking all right. We have our resistance area between 83,500 and 79,200, and it's still intact. So yeah, that is also looking okay, even though obviously here this dump looks a bit spicy on the daily chart as well. Again, we're approaching RSI levels that are low. But I told you last time as well, a few episodes back, if you're following our analysis, we also looked at the Bitcoin chart a little bit, and we talked about the RSI as an indicator that is quite stupid but effective, honestly. Stupid meaning of it's a simple indicator. It doesn't track a lot of crazy things, but sometimes the easy things are maybe the most efficient ones. And as I told you last time, RSI on the Bitcoin daily chart in a heavy oversold territory usually is followed by some sort of relief rally, and this could happen as well here. We saw a very low RSI when we printed the last Bitcoin low. Maybe now either what I could see happening is going a little bit lower, maybe tapping into this resistance area one more time up to 78K. It could be as bloody as that, and then the RSI though is going to stay above the last low, which will give us a divergence between RSI and price. Divergent means price is going to dip a little bit lower, but RSI is going to stay a little bit higher. And that is again a sign for a reversal. So I am your permeable at your service, ladies and gentlemen. I'm still not convinced that this is gonna shit the bed too much. I think we're gonna find a bottom here. This is just another flush to kind of keep, because this looked like we're going up, but I don't trust these structures. That's why I had this ABC here on the chart as well. It looked like we're going to print and we're going to go up. A lot of people probably opened their positions again, but nope, we're not doing it yet. We're not ready to take off yet. I think soon, though, soon, if this analysis makes sense.
I think we might see a turnaround for Breakpoint. You know, that'd be a nice little Christmas present because Breakpoint this year is very, very close to Christmas.
Exactly. Breakpoint is close to Christmas, and it's the year-end rally. It's the end of Q4. It's our last chance for the Bulls to show that this year is not completely lost. Let's see. It could happen, actually. It could happen.
Yeah. I think the first thing that we want to talk about in terms of macro market news that might be affecting the charts, and I think Simon, you have a video that we can play from our favorite Orange in Chief. Uh, he has a very interesting idea. So how about we play that video, Simon?
Let's hear him hard first.
And now he's got us in a bad place. So we're paying $360 billion a year for each point. Now, I believe we should be 3 or 4 points lower. So that's over $1 trillion we pay every year in interest. And it's really just a paper calculation. You sign a document and you save almost $1 trillion.
We're both laughing. Like, how can anyone listen to this and be like, yeah, this is my president? I'm sorry, guys. I respect Trump a lot for what he's doing at his age, not gonna lie. But sometimes he's just hilarious. So what happened here in a nutshell? You know, what's he talking about? Is this
Yeah, well,
delusional? Maybe he's also high.
well, I he's got better doctors than I do. But no, so first of all, Simon, let's give people some context, right? Like, what does
Yeah,
a rate cut usually look like? In fact, what was Parley Market talking
sure.
about? I mean, on the last show, it was like, what,
Yeah.
50 points? You know, rate cut? Is that what we're
Exactly.
looking at? Or
Yep. So 25 bips is currently the highest chance on poly market still, if I'm not mistaken. It was a few days ago.
yeah,
And a 50 basis point rate cut would be the second highest
mm,
um, probability, which is usually what happens at FOMC meetings. You mostly make the decisions, or at Fed meetings, you mostly make the decisions to cut the rates by 25 basis points to 75 basis points, maybe, on a more aggressive stance, because it is a fairly sensitive lever that you're operating on here. By you're not just changing numbers on a piece of paper that you sign. You're impacting global economy with this decision.
Yeah. And so, with that context in mind, what Donald Trump is recommending or urging the Federal Reserve to do is 3 to 4 points, not basis points, points, right? So that's like, you don't refer to the rate this way, but that's like 300 to 400 basis points. Okay. So, like that, this is a step change in the vibe. He certainly wants to be the president that's known for explosive economic growth. Like he could really give a shit about what happens after he's in office, right? Like all he wants is anything he can do to juice the economy, even if it comes at the expense of the long-term health of the U.S. dollar. Donnie doesn't care. So,
Donnie doesn't care. That's a good ticker. Maybe you should go with this one going forward. Donnie doesn't care. Donnie just doesn't care. Yeah, I think we definitely have to cut rates. Like, I agree with him on that front. But maybe not that much. I mean, it is definitely a rather aggressive move from his side. But I think, look. I mean, what are the motivations here? Borrowers obviously have a good time, right? Like, if you borrow money, if you have credits and loans out there, then you're a winner of low interest rates, because you get cheap capital. So for anyone that holds a lot of real estate, that is a good idea. But also for the US government with a shitload of debt, obviously it's good. If interest rates are low, and you can borrow cheap, plus your inflation rate is going to eat away your debt, because inflation not only eats away wealth, it also eats away debt. So for people that have a lot of debt, inflation is actually not that bad. So currently, we're still closer to 3% at a 2% target for inflation. Putting the rates down to 1% is definitely going to impact inflation as a sluggish, indicator, or not indicator, but over time. And yeah, so you can imagine that's not so good for people that have money, like in US dollars. But it's good for people that have debt, right? Which is usually businesses, real estates, governments, and so on. So that's not bad. But also retirees, obviously, are not benefiting from this, because their pension funds and most of their yield comes from fixed income portfolios. So these are gonna go down all the way to 1.5%, 1%ish, which is obviously also, yeah, not great, honestly. But risk assets would moon.
but Simon, all you have to do is just sign a piece of paper, and that's like $1 trillion in debt. That we could just we could pay down. It's just all you gotta do is just a signature on a paper, Simon.
It is simple. We're not saying it's not easy. It's just not right. And I mean, I want my backs to pump, right? So he can do what the fuck he wants. If it makes the backs pump, sure. But still, not convinced that this might be the best idea for the global economy. But we're gonna see in in this month's meeting, when the Fed is gonna make a decision on cuts.
Right. Another big piece of global macro news that love to share is that the Thai government has reduced capital gains for crypto to 0%, which means that you can now buy and sell crypto for 0% capital gains. And there are a couple of conditions here, though. Number one is that you have to use a regulated Thai exchange. Which is quite smart, I think. So Thailand is basically saying, we definitely want our citizens to have access to crypto assets, but we want those assets to be controlled by entities that we control.
Right.
Right. So,
unfortunately,
yeah. So this kind of gives Thailand a way to give access to high quality assets like Bitcoin, but doesn't make, let's say, like much higher risk meme coins that are launched on Pump. tax-free status.
Mm.
So this way, the Thai government can kind of incentivize people more towards, centralized exchange trading. So that's a little not so great for Solana if we're talking about on-chain liquidity. Also, something worth noting is that obviously liquidity and trading pairs on those exchanges are necessarily going to be much thinner. Than you would find on a global exchange. But still, I think it's great that at least for assets like Bitcoin, Thai citizens can get access to it and not pay any taxes. So hopefully we see more maybe Thai institutions buying
Mm.
Bitcoin.
Yeah, yeah. Pro crypto regulation is always great for me, especially here in Europe, where a lot of times crypto taxes are not so great in some of the countries, especially corporate. But we also have BM in the community saying 0% in Portugal on crypto capital or on capital gains, which is also quite progressive. So there's countries where you have an option.
And last but not least, something that does tie into the interest rate conversation is Arthur Hayes, had an interview where he warned that USDT might go insolvent. So,
Mm,
as most people know, stablecoins are collateralized, especially USDT, by US Treasury bills. And if
mm,
we do have the Fed, I mean, God forbid, but they cut interest rates down all the way to a percent. What that
mm,
will mean is that suddenly the yield that Tether was supposed to be earning on U.S. Treasury bills, which is sitting at about like 4% right now, would significantly decrease. The
mm,
Because Tether is already thinking about this, they have a lot of their stablecoin collateralized by gold and Bitcoin now. Because they foresee that, okay, with lowering interest rates, we can't make as much money as we would on gold and Bitcoin. So instead of holding U.S. Treasury bills, we're gonna hold gold and Bitcoin instead. The problem with using volatile assets like that, as Arthur Hayes points out, is that if there's a 30% crash in the value of those holdings, theoretically USDT could be insolvent. Meaning that if you were to have a bank
mm,
run, maybe the first 80% of people who pull out their money will be made whole, but the remaining 20% would be holding the bag, at
mm.
least until Bitcoin and gold, recover in price. So always
Yeah.
have to be careful of bank run scenarios. But yeah, that's something that could bode very, very poorly for crypto markets if one of the most important base
Mm.
pairs in the industry were to be
Yep.
insolvent.
Oh, 100%. This would be a black swan kind of environment. Yeah, it's a bit risky. I don't know if you should do risky things as a stablecoin company. The question, like your main job is to keep your fucking pair stable, if I'm not mistaken. Like just
Mhm.
don't make it depeck. That's the only job you have to do really. But obviously Tether wants to also have their treasury make some yields and make some money. And so far it has been printing with interest rates being okay for fixed income. And if interest rates would drop, for example, to 1%, obviously there would be a big cut in their income. But like gold and Bitcoin, it is risky, right? Like it moves. It is volatile. It's not a stable asset that you're underlying under your stable
Mm,
asset. So just keep that in mind. There's volatility involved, but it could be genius as well.
mm.
But again, it depends on market movements. I think we'll see next year. I think it can work, my personal opinion. But obviously that highly depends on the markets. But as it look like right now, we will see further rate cuts, I think, and I don't think gold is gonna crash. It might correct, but it won't crash. Same with Bitcoin. But those are my opinions and my views. So no financial advice, guys.
Well, that just wraps up the coziest part of the Soul Brothers podcast. Simon, you want to remind people where they can listen to the show?
Hell yeah. Indeed, it does wrap it up. Thanks for tuning in today, guys, and listening to us yap about prices and macro. We also talk about Solana news on this channel, so make sure to subscribe to our YouTube at Sol Brothers Pod. Give this video a like, please. Leave a comment as well, and check out the other videos on our channel. And also make sure to stay in the known with the Sol Brothers on Twitter. We also have a Twitter account at Sol Brothers Pod where we're live streaming these recordings. So we will see you there. Thanks for tuning in and peace out.